How can I finance a rental property? Because real estate investing isn't just for the super wealthy and corporations that buy everything in cash or from big slush funds of money. In fact, the majority of owners of residential real estate that is used as an investment is by simple, everyday people like you, mom and pop style. Whether it was a property they may have inherited, one they paid off already but decided to move on but kept, or intentionally saved and built up on their own to help them improve their lives and their family's life. Real estate investing is for everybody. So now let's talk about how to actually buy one of these properties, because not everyone's out here paying cash. There are a variety of creative ways people can use to purchase real estate, but here are some of the more common loan options that you can use to help you buy a rental. Number one, most common, is going to be a traditional, conventional loan. Fannie Mae, Freddie Mac, this is the most common option. You'll typically need to put down about 20 to 25% for the investment property, and in some cases I have seen it go up to 30%. There's a really cool strategy known as house hacking, which you can use with a simple FHA loan product. Now, this house hacking strategy, you only need to put down the minimum of 3.5% down, or sometimes 5% down. But what you do is you live in the property for at least a year and make it sure it's your primary residence. But this works really, really great for duplexes, triplexes, and fourplexes, where you can live in one side while renting out the other units to help lower your own housing expenses and save more money to invest. In the future, when you move out of that house into your next property, you now have 2 units that are renting for you. The DSCR loan is another great product. These are special investor loans where the bank looks at the property's cash flow instead of your personal income to fund the deal. You usually typically need, again, 20-25% down for this type of loan, but it's great because it's a product that you don't have to personally qualify for using your income. Portfolio loans. If you're planning to buy multiple properties, some lenders offer portfolio loans that can let you finance multiple deals at once. You'll want to shop around to see who is capable of doing this in your area and what their terms and pricings may be. And if we want to get into an even more creative option, seller financing and private money is another way that you can get into this. This is where you negotiate directly with the seller or use a private lender, a friend, a family member who wants to invest into you and your business instead of using a traditional bank. This can include things like land contracts, sub-2s, and other creative strategies. This is directly between you and your people. Hard money loans are also an option. This is where an accredited investor funds your purchase and sometimes the rehab costs of the property as well for a short term so that you can get your foot in the door to begin investing into it until it can be sold or refinanced into a more traditional product.